Hi traders and welcome. My name is Lockie. I'm the CTO at Samurai Day Trading out of Singapore. As I'm a very passionate trader, I'm also a funded prop trader with multiple prop firms. And recently I was asked the question, Lockie, can you please run a 60-minute masterclass for the Samurai family globally on exactly how to get funded, but then most importantly, is how to stay funded in order to work towards your first withdrawal, and off we go. So that said, ladies and gents, I put together the webinar for you. It's around about 70 minutes long. Around 45 minutes into the webinar, I actually go into the charts, guys. And what we're going to do is we're going to detail to you, as per the trades called in the live trading room, exactly how you could have entered the trades with the intent of actually getting funded and ultimately staying funded. Now, the 4 points, ladies and gents, when I interview probably the top 10 to 15 people that I've trained to be funded, guys, all of them decide that the 4 points, guys, in the background of this slide are very important. So what we need you to do, if you want to get funded and you want to stay funded, you've got to trade with structure. Risk control is absolutely everything. Guys, patience is going to be activity every single time. And finally, consistency is not only the thing that's going to get you funded, but it's going to keep you funded and get you to that magic point where you can start withdrawing. Now, guys, having trained hundreds of traders globally on the prop trading cycle, may I suggest the webinar that you're about to view had some significantly brilliant feedback. Guys, particularly at the end, when we talk about this is the exact trade that I would use if I want to get funded, and all of these were called in the live trading room for you. So with that said, ladies and gents, I hope you enjoy the video. If you've got any questions at all, please do reach out on our socials, or you can use email, guys. Say hello at samuraidaytrading.com, as that will be able to get you into the Samurai family. And if you would like, come and do a quick tour of the live trading room and see where it all occurs. So with that said, ladies and gents, I hope you absolutely love the video, and I look forward to seeing you in the live trading room as soon as you are ready to be trained as a professional trader with Samurai Day Trading. Nice. There we go. So we're off and racing, ladies and gents. So welcome. Welcome, Lockie here. Hope you're fantastic. It looks like it's very hot in downtown Australia, guys. It's very cold. The opposite in the mountains of Japan. For the last couple of days, we've actually had to go to school in the snow, guys. So that normally means the boys, as we walk to school in the morning, will normally end up hitting with a snowball, which is just, I suppose, part of walking to school with the boys. Now, guys and girls, I wanted to run a webinar for you tonight on how to get funded. Now, the reason being is there's a lot of people out there in the world that are going through the funding process. So what I wanted to do, guys, is reflect on the experience tonight of those people that have already been funded, also those people that are in the process of getting funded. Guys, I wanted to talk about how to get funded, but most importantly, also stay funded. I wanted to talk about some of the pros and cons of funding. I also wanted to show you the charts from tonight to actually show you how you could have actually aided your journey as if you were wanting to get funded. We're going to talk about the differences primarily between TTP, or the trading pit, and Apex. Mathematically, it is a lot simpler, guys, to get funded using TTP. There's no question about that. So what we'll do is we'll go through the pros and cons of both of those. Ahmed, how are you? I hope you're fantastic. So guys, we'll go through the pros and cons. What I want to primarily do tonight, guys, is I want to get back into the charts. We can also bring up the Excel spreadsheet. Guys, I've been asked for the Excel spreadsheet a number of times, guys, just to, I suppose, just to bring into relevance. You know, guys, I keep on targeting this, this NASDAQ trading 24/20 plan of 20 ticks a day, 4 days a week, up to 20 contracts. Guys, interesting. Well done. But the interesting thing, guys, about that trading plan, 24/20 plan, is that will earn you, guys, just under $1 million Aussie dollars over the next 3 years. Right. So before we lose sight of the power of 20 ticks a day, 4 days a week, guys, working our way up to 20 contracts, guys, even if you're starting with a self-funded account of $10,000, or you're starting with a $250,000 funded account, guys, you can still move your way up to really good income, guys, over the next 3 years, which I do think is really kind of exciting. Okay, so guys, we'll get into it. One of the primary things we do want to talk about tonight, guys, is the dynamic trailing stop versus the static trailing stop. I want to talk about the differences between those and ultimately what that ultimately means for you as traders. So guys, from the team, so guys, I spoke to Damsey, spoke to Cody, guys, also had a chat to Tim. Tim kind of agreed with point number one, guys, and also point number two. So I wanted to get, I don't want this to be just the world according to Lockie. I want to be to the world according to the team. So guys, basically the most important lesson, guys, having already gone through the funding process myself, all right, one of the most important lessons that you may learn, guys, in the funding process is that you're not trading your account value. So for example, me at the $250,000 mark, guys, I'm not trading a $250,000 account. I'm trading a $6,000 available drawdown. All right. So for those of you that do want to get funded at the 250 mark, guys, which is 250 US, it's a good spot to be funded. Guys, your trading target is $15,000, but you can't lose $6,000 in the process. What does it actually mean? Guys, it means that you're not trading a $250,000 account. You're actually trading a $6,000 account, because if you blow that $6,000, you blow the whole thing. You've got to go and start again. So one of the things, as one of the misconceptions I would suggest right from the word go, is a lot of people say, well, Lockie, I'm funded at $100,000 or funded at $50,000. Therefore, I'm going to go and trade 4 or 5 contracts. Whereas now I would suggest at this point in time, that's probably not the smartest plan. All right. So guys, you're trading your drawdown. And what I'll do is I'll use a $50,000 example. As the $50,000 drawdown is $3,000 or $2,500. So what does it mean is that if you want to get funded at the 50 grand mark, guys, you're not trading a $50,000 account. You're trading a $3,000 account. So if I asked you, exactly right, Petros, 2K with TTP. So if I said to you guys and girls, you're trading a $2,000 account, would you be trading 4 or 5 contracts on the NASDAQ on that one, guys? Or would you be trading 1 contract only, doing it really, really well? G'day, Nathaniel. How are you? Hope you're fantastic. So may I ask then, what's the point of calling it a $50,000 account? Because when you get funded, mate, you've actually got the power of a $50,000 account. So that does mean you can go up to 10 contracts. Petros, exactly right. So as you can go up to 10 contracts, you can do all this kind of stuff. Thank you, Lee. So guys, on Apex, guys, for a 50K account, the target is 2,600 with your drawdown 2,500. Now that's a really awesome point, Lee. Guys, because once again, if you've got a $2,500 trailing stop, then effectively, psychologically, you've actually got a $2,500 account, not a $50,000 account. So Nathaniel, back to your point, if you were to treat your $50,000 account like it was a $2,500 account, you are highly likely to get funded. Highly likely, exactly right, man. Exactly right. Brilliant. So guys, from young Damsey down in Sydney, he said, Lockie, the way that he's got funded, guys, so the ways that he's got funded is lots of very small trades repeated many times, helps you avoid the dynamic trailing stop that is a function of Apex. So we'll talk about dynamic versus static in a second. Guys, now from young Cody, in Bali, he said, trust the process and the outcome will follow. I do love that. I think that's brilliant. So trust the process and the outcome will follow. You do not need to rush passing challenges or building contracts, guys. So again, I kind of tailored Cody's towards the end, guys, by saying this. Instead, guys, what you want to do is earn the right to do this, targeting the 3 to 5 year career change. All right. So that's my little bent on the end of Cody's there. So I love Cody's point, guys. You do not need to rush passing challenges and building contracts. Okay. I do really, really love that. As I also love the fact when Damsey said lots of very small trade repeated many, many times. Yes. Yeah, Petros, I'll talk about that in a second, mate, because there's pros and cons to both. There's pros and cons to both funding partners. As I personally find it a lot easier, and this is my journey, a lot easier to get funded with TTP than Apex, but I'll explain why. I've been funded, guys, with Apex, no problem at all, but I did find TTP a lot more enjoyable. I'll show you why in a second. Now, guys, now that being said, there are many funding options out there, guys. The primary difference is ultimately is the trailing stop. So, guys, all funders have pros and cons. So what I'm going to do tonight, guys, I'll basically sit on the fence. I do like TTP. There's no question about that. The reason being is the end of day trailing stop, right? So let's break it down a little bit further. So my initial observations, guys, if I can, you've got Apex Trader funding. It's cheaper, guys. It's cheaper. It's bigger, and they've been around a long time. Okay, so that's kind of awesome. The flip side being they've got a dynamic trailing stop. Okay, now further to that, the challenge cost. So when you do pay for your challenge, guys, the challenge cost does not get paid back to you, guys, in your first funding withdrawal. Mind you, the profit share is 90%, 10%. Okay, so pros and cons. The trading pit, guys, more expensive. It's a smaller company and they've spent less time in the industry. Now, guys, having spoken to the CEO and the senior staff, I actually don't think that is an issue at all. In fact, I think they're very, very, very exciting company. Guys, I think they're going to go very, very long way. I've put in green there, guys, EOD or end of day trailing stop. Now, that's going to become really, really important for you guys. I'm going to show you on the NASDAQ later what that ultimately means. These guys built Tickmill. There you go, mate. Absolutely brilliant. Yes, correctly. Yeah, you are correct. You are correct. So that being said, guys, so the challenge cost, if you do pay for a challenge with the trading pit, guys, you do get that money back in your first funded withdrawal. Now, in saying that, guys, they pay up to an 80%. They pay up to an 80% as opposed to 90% with Apex. Guys, if you're looking at that going, well, Lockie, I want to go with Apex because they can, Petros, it's a good point, guys. When you first start with TTP, guys, you're going to be targeting around about an 80% return. You can scale up to 90%. So ultimately, at the end of the day, I don't want to be rude, it basically comes down to dynamic trailing stop versus end of day trailing stop, guys. And this is probably one of the primary differences between the two, right? So I'm going to break it down a little bit further for you. So guys, now when I did my slides, yesterday, this information was up to date. So I hope it's still up to date at this point in time. So we're going to use a hypothetical $50,000 US dollar funding. So what we've got, guys, Apex, it's a $3,000 target and a $2,500 drawdown. It looks like that may have changed. It's a $2,600 target now, Lee. So 2,600 with 2.5K drawdown. Just be aware, guys, you've got a dynamic trailing stop. I'll talk about that in a second. TTP, guys, you've got a $3,000 target, you've got a $2,000 drawdown, and you've got a 1K maximum daily drawdown. So what they're basically saying is, guys, we're not going to, so TTP are actually saying we're not going to let you blow yourself up in one day. So if you've made a mistake and you lose $1,000, we're actually going to stop you from trading, as opposed to we're going to keep you going, blow up the entire thing and start again. So TTP, guys, has basically got a safety catch built in to getting funded. All right. Now, let me break this down a little bit further. Guys, perfectly. Okay, absolutely brilliant. So, guys, what is the difference? And what I keep on saying this dynamic trailing stop. So let me try and graphically explain what the dynamic trailing stop is. What I would then do is I'll go into the charts and show you the difference in your performance today if you're a NASDAQ trader. And again, we start to talk about which one may be easier to qualify on. So as my webinar today is not about whether Apex is better than TTP or vice versa. It's basically how do we get every single one of you funded at least 100,000 US dollars and then get you to make 20 to 40 ticks a day on the NASDAQ for the next 3 years. So everybody in the webinar makes more than $1 million in the next 3 years. Guys, that's the intent behind the webinar. So guys, that's our starting point. So let's say that's our entry point for the trade. And basically, you've got a $3,000 target on your actual account. All right. So you've got the starting point for the account. Sorry, not entry point on the trade. You've got a starting point on your account. You've got a $3,000 target to the high side here. Now, guys, down the bottom there, you've got your stop loss. So this is the stop loss, which is going to blow you up if you make a mistake. Okay. Now, interesting point, guys. If you are with Apex, right, guys, if you are with Apex and the market moves $1,000 in your favor, what you're going to find is because your trailing stop is a dynamic trailing stop, what's going to actually occur is if the market moves $1,000 in your favor and then turns around and goes back to break even, what you're going to find is your trailing stop will actually move $1,000 closer to knocking you out of the market, even though you've made no money. So let's say you're on a trade today, you let the trade go $1,000 US into profit, then it turned around and went back to break even. You're thinking, oh, wow, I could have locked in the profit, but I didn't. Guys, ultimately what that means is your trailing stop now has moved $1,000 closer to knocking you out of your account and forcing you to start again. All right, so let me text this for you. If the market was to move $1,000 US in your favor, your dynamic trailing stop chases the market cent for cent. All right, so if it's $900 in your favor, or $100 or $200 or $300 or $400, as if you're with Apex and you don't lock in the profit and take the money out of the market, what's going to happen is your dynamic trailing stop is progressively going to get closer and closer and closer, and eventually it's going to knock you out. Now, if the market does not hit your target and goes back to break even to meet your stop loss, your dynamic trailing stop will have moved $1,000 closer to your hard stop. Guys, the hard stop is where they basically blow you out of the water. You've got to go and pay another subscription and ultimately start again. So your trailing stop has moved tighter, even though you've made no money on the trade. So if that trailing stop, guys, started at $2,500 US and you've got a $3,000 target, okay, you've now got a trade. So you know how we said at the start, guys, if you want to get funded on a 50 grand account, you've got to trade your available stop loss or your available drawdown. So what's just occurred in this scenario is your available drawdown has just been reduced by $1,000 and you've made no money whatsoever. Okay, now that's why Damsey said, if you want to get funded with Apex, the only way to get funded with Apex is take lots of tiny little trades, lock in your profit quickly, and just do it over and over and over and over again. Right? So that dynamic trailing stop doesn't ultimately chase you to the point at which it squashes you. Now, in this scenario here, let's say you've let the market go $1,000 in your favor, but then it's turned around and stopped you at a break even. You've now got a drawdown, guys, a hard stop drawdown on that account of $1,500 US. So if you do exactly that scenario again, and guys, the reason I mention this is a lot of people, guys, in the game of getting funded, go for massive winning trades with the intent of trying to qualify on these funded accounts with one or two trades. Now, where it bites them in the bum is they do this twice, where they let a trade go maybe a couple of, let's say $1,000 into profit, comes back to break even. Then they get in another trade, goes into $1,000 into profit, comes back to break even. What they've actually done is, if you do that twice, your dynamic trailing stop has moved $2,000 towards you. It only started at $2,500. So then you've got a $500 stop loss. Now, guys, there's a really, really lovely guy in northern New South Wales, guys, that's got to the funding point with Apex 4 or 5 times, and literally got to the point where he's got about $150 or $200 to go, and the hard stop trading stop has gone and taken him out. It's literally, it's gone out. Literally, Lockie, I've got one more winning trade and I'm there. He's then taken a $300 stop out, and guess what? His hard stop was sitting at $250, knocks him out. It's got to go and start the entire process again. All right, so that, guys and girls, is a dynamic trailing stop. The most important thing that I want you to take away from this is the trailing stop follows you cent for cent. So even if you've got a big unrealized profit trade that turns around and goes back to break even, your trailing stop is ratcheting in closer and closer. The intent behind the dynamic trailing stop is to knock you out. So then you go and get funded again. Then it knocks you out again. Then you get funded again, knocks you out again, just keeps on knocking you out. Okay, very, very different model. I'm just going to say different model, guys, different model. And of course, guys, you're paying commissions on the trade as well, right? So that's a dynamic trailing stop. Now, I want to explain the difference between an end of day trailing stop. Okay, so an end of day trailing stop is this. So let me just roll through, right? So let me put the text back on. So in the case of an end of day trailing stop, if you let a trade move $1,000 into profit, and then it turns around and stops you out at break even, because your stop loss, so your hard stop, is calculated on your end of day trading balance. Even if you let a trade go $1,000 into profit and then it comes and stops you out at break even, guys, your trailing stop with TTP, because it's calculated at the end of the day, your trailing stop doesn't move. It goes back to where it started. Okay, so what does this ultimately mean, guys? I'll just read this for you. If the market does not hit your target and goes back to break even or to meet your stop loss, your end of day trailing stop will not have moved $1,000 closer to your hard stop. Why is that? Your hard stop is calculated at the end of the trading day based on your end of day account balance. So what that means, guys and girls, and this is I think a screamingly massive advantage with TTP, is you can go for large targets on every single trade you take. Because let's say you go for a 100 tick target, guys, on NASDAQ, for example. That's what we're about to work through. Let's say you go for a 100 tick target on NASDAQ and you've got a trailing stop that knocks you out at 60. Well, you don't care, because again, at the end of the day, your trailing stop will be based on the end of day trailing stop. So you can, guys, as a NASDAQ trader getting funded, you can go for a 100 tick target on every single reversal trade, knowing that it doesn't matter if your trailing stop takes you out at 10, 20, 30, 40, 50, 60, 70. You could literally just go for 100 tick target on every single trade, understanding there's no disadvantage of that market going to 99 ticks in your favor than coming back to 0. But if you were to do that, guys, with Apex, every time the market moves 100 ticks in your favor, even if you don't realize that profit, your trailing stop is chasing you cent for cent. Can everybody see a difference? Now, again, this is, guys, this could mean the difference between getting funded and not getting funded. Now, guys, Apex is really popular because we knew about Apex a long time before we knew about TTP. Guys, however, based on just this dynamic alone, it's actually mathematically simpler to get funded with TTP, because you can go for large targets on every single trade. All right, now let me build, guys. Let me build on this a little bit further. Let me build on this a little bit further if I can. Guys, so how to get funded and stay funded. How to get funded and stay funded. Basically, what does it mean for you as a trader? Because what it means is, if you're going to try and avoid that dynamic trailing stop that Apex has got in place, you're going to have to target lots of small trades, and you're going to have to lock in profit quickly. Now, please have a look at the difference, guys. So to qualify with a $50,000 account, you need 30 20-tick trades on one contract to qualify. Now, understanding that your hard stop, guys, when I wrote the slides, was $3,000 US, that means you can trade one contract carefully on the NASDAQ with the intent of trying to qualify. Guys, you can do one contract on the NQ, one contract on the S&P 500, or two contracts on the FDXM pretty easily, and you should be able to navigate that fairly simply. Now, guys, with TTP, because of the end of day trailing stop, you can go for far larger targets on every trade. Guys, so let's say you went for 50 ticks on every single trade. Guys, can everybody see the difference? So if you go between 50 and 100 ticks on every single trade, guys, let's say you get stopped out at 30 or 40 or 50, and you get a couple of hundreds. The fact is, guys, if you get 3 100 tick trades on the NQ, which you could have done today, so 3 100 tick trades just today. But if you do go for a 100 tick target on NQ, guys, it's a $500 US target. As if you do 3 of those in a trading week, you are halfway qualified to getting funded. Now, you could have taken 300 tick trades today. FDXM Petros, you could go for 4 if you wanted to. Maybe 4's fine. 4's fine, absolutely. How might this work with the TTP consistency rule? Nathaniel, that's a good question. Mate, that's a good question. What TTP want you to do with the consistency rule, what they want you to do with the consistency rule is make sure that you don't make $2,900 on one day and then basically say to them, hey, look, I want to get funded. They're actually looking for, yeah, Keith, exactly right. They're looking for the consistency of your performance. Okay, now, having run this scenario by Arlen a number of times, I've said, look, this is what we're doing. These are the reasons why. This is why I'm going to push the TTP funded traders for 100 tick trades. Guys, because at the end of the day, all we want you to do is get funded. Exactly right, Keith. So, guys, as Keith has said, guys, it's a minimum of 3 days to get funded with TTP. But let's say, guys, you said, righto, Lockie, every time I pick up a really, really good reversal on the NASDAQ, thank you, Mark. Well done. You are spot on the mark. Every time I pick up a really good reversal on the NASDAQ, guys, like we did today, I'm going to try and push my profit out to 100 ticks. Understanding if I get 100 ticks, good on me. This is hilarious. Also understanding, guys and girls, there's no disadvantage. And I don't know if I can jump up and down enough on this. There is no disadvantage with TTP going for 100 ticks on every trade. If you happen to get 40 or 50, Awesome. Guys, if you get 100, double awesome. Exactly right, Petros. Any excess amount over 40% of the target is added to your target. Yes. So, mate, what I'm highlighting here is that the mechanics of doing what we're doing in order to qualify for those people that want to get funded, is the mechanics of what we're doing is very, very simple. Okay, very, very simple indeed. Now, there are some rules, like as Petros has mentioned there, guys. Any excess amount over 40% of the target is added to the target. What does that mean? Guys, so your target is, say your target is $3,000. If you go and make 40% of that $3,000, guys, in one go, so 40% of $3,000 is well over $1,000. So if you guys were to say, you know what, Lockie, I want to get funded. Exactly right, Mark. I want to get funded, guys, on $50,000 with TTP. How do I do it? I would say to you guys, target $300 to $500 per day. So what does that mean, guys? We're looking for between 60 and 100 tick trades per day. We're going to take one or so of those trades and we say, all right, Lockie, I have an awesome reversal. Come back tomorrow, do the same again. But if you guys were to do that, guys, if you were to do that, you're looking at getting funded in around about 12 to 14 days. Now, we've had people, guys, on Apex that have literally gone through the Apex process. And I'm not downplaying Apex, guys, but we've had people get to just before qualifying around about 8 times, and then the hard stop has actually taken them out on their last day of trading, or they've made a mistake, guys, and because they know that hard stop loss is chasing them, they get really, really nervous on the last day. It's like, oh my gosh, I've got one more day to qualify. Isn't this amazing? Guys, they get nervous about the hard trailing stop. They make a mistake, triggers the trailing stop. They go all the way back to zero and start again. So, as much as I'm not allowed to make a recommendation as to which one I think is a lot more fun, guys, I can tell you that I've found the TTP more fun. But at the end of the day, I do want you to go and read the pros and cons. Guys, it's all there on the website. It's all ready to rock and roll. And Nathaniel, that's a great one. Is there an ATM you might suggest for locking in some profit and throwing out a target to 100 ticks? So, but if you are looking at reversals like what we were doing today, you could use an ATM, provided your reversals are fair way away from the MDI and you're on the NASDAQ. But you could be using an ATM of touch 38, pay 10. All right. So what that means is what you're doing is you're basically letting the market run a decent distance in your favor. If you're with, so interesting point, Nathaniel, if you're with Apex, you don't want to do this, because what you're doing is you're letting a trade run 40, 50 ticks in your favor, but you're only locking in 10, which means that if it turns around and comes back out and knocks you at 10, that 40 tick difference between 50 and 10, your trading stop is automatically tightened behind you. If you were wanting to get funded with TTP, mate, I would be setting a 100 tick target on every reversal. And I'd be basically saying, righto, once these guys have gone 40 ticks in my favor, I'll lock in a bit of profit. 60 ticks, I'll lock in a little bit more. 80 ticks, lock in a little bit more. My goal is to try and hit 100 ticks. It's $500. But again, you're not going to offend any of the performance thresholds. You're not going to go over the daily limits. You're not going to do anything, guys. So that classic sort of 60 to 100 tick target on the NASDAQ traded well, guys, even today, you could have done it brilliantly. Now, next ratchet, trailing stop to keep maximum profit. Yeah, so Keith, what you would do, guys, if you're going with Apex, is every time the market moves a little bit further in your favor, you're going to have to lock in more and more and more profit in case it turns around and comes back the other way. Okay, whereas with TTP, if you don't mind, you're going for far larger targets and you've got the pressure off moving the trailing stop. Okay, which can be. I just find TTP a lot easier, guys. So Petros, for FDXM, 4 contracts times €5 times 5 ticks is €100. That means you need 30 trades over 20 trading days without a loss. Isn't that unrealistic? Mate, if I was on the FDXM, mate, what I would be doing if I was with TTP, I'd be going for a 10-point target, which takes the pressure off you needing to get the success rate correct. I'd be going for a 10-point target, understanding that if it doesn't hit 10 and goes to 8, you might lock in 5. Today, guys, again on the FDAX, if you had picked up the first 2 or 3 trades that I would have called, all of them went way beyond the 10-point targets. Yeah, oh yeah, absolutely. Nathaniel, I wouldn't go beyond 2 contracts, mate, during the challenge, because when you first start, guys, gets me to my next slide. When you first start, guys, there's a lot of people that go and get funded. They've got funded. Then the moment they get funded, they're like, yeah, I'm funded on a $100,000 account. And they suddenly go to 4 or 5 contracts on the NASDAQ and go, oh my gosh, I'm going to belt this out of the market. And they get completely belted. Literally belted, go back to square one, start again. So I'll give you guys, the exact contract step up plan that I'm personally using. I'll give that to you so you can understand what I mean by trading yourself out of the danger zone and then moving on from there. Okay, so let me do that for you. Now the trap, guys, the trap, which I do find really interesting, right? There's a really big trap on this one. Guys, I went to one of the trading websites last night, guys, and I said, hey, I want to get funded at $100,000. And they go, yeah, you can trade up to 10 contracts on the NASDAQ. Okay, 10 contracts on the NASDAQ, and I've got a trailing stop of $6,000. Guys, if honestly, a question for you, would you be trading 10 contracts on the NASDAQ if the actual reality account, you've got $6,000 in your account? So this is why I think it's really important that we don't trade the value of the account. We trade the value of the drawdown. Now, if we take the value of the drawdown into account, there's no way, guys, we're going to be trading 10 contracts on a $6,000 account. 1, maybe 2. And what we need to do is, you might have heard this before, we need to double our account. So if you've got a $6,000 account, guys, you need to double that before you would step up a contract. And then do the same thing again, step up another contract. So I'll give you the numbers. I'll give you the numbers that I've given to a number of traders. So guys, ultimately how to stay funded. I did bring this up in the LTR yesterday, but guys, from all of the boys and girls, guys, the best way to get funded is please do 1 account only. I am amazed at the number of people I speak to, guys, that are trading 10 accounts simultaneously, trying to get them all funded at the same time. Now, if I was in charge of everybody, guys, I'd wave a magic wand and I would say, go and get funded at either 50 grand or 100 grand or 250 is my favorite. Go and get funded at $250,000. What I want you to do is I want you to go through the evaluation process and then get funded. What I want you to do then is trade that funded account out of the danger zone. Guys, you literally get out of the danger zone. The danger zone is as when you first got funded, let's say you're funded at the $50,000 mark. Guys, the danger zone is getting that 50 grand account to 60,000. So basically, guys, if you will, adding around about, say, 20% to the account, right? So the danger zone with the $100,000 account is getting that $100,000 account away from the trailing stop and well clear of the trailing stop. So guys, this is what I did, guys. This is what I did for the guys that are funded at the 250 grand mark. All right, this is the plan I gave them. So please, guys, please, I can write this on a chart for you if you want, guys, but if you've got a pen, write this down. TTP, like a broker between you and the market, like Forex. No, Cole, that's a great question. So guys, Cole's question is, are the funders like TTP, or the funders like TTP, are they like a broker between you and the market? No. Your data feed, you were using a Tradeovate data feed. So the Tradeovate data feed, just like you're trading with Ninja, or you're trading with Apex, or you're trading with TTP, but your data is Tradeovate. Now, they don't sit in between you and the exchange. Guys, TTP, just like Apex, make a clearing fee. So every time you push a button, they do make money. Guys, and that raises a really good point. Guys, I'm currently talking to TTP about getting a clearing fee discount for Samurai clients. So the more people that get funded with TTP, guys, the more I can go to them and say, hey, listen, we've got 25 traders funded with you guys. Can we now get a reduced clearing fee on these trades? Right. So the only way we can do that, guys, is by effectively hunting as a pack. Now, mind you, guys, some of our biggest traders are funded with Apex, guys. That's because TTP wasn't around when we first started the journey. But suffice to say, guys, TTP's a lot of fun. But to give you an idea, I can pick up the phone and talk to the boss of TTP very, very quickly. I can't even get an Apex to email me back. So you can read into that as you need to. Yeah, the beauty of it, guys, is look, TTP are lovely. They're helpful. I think their product's really, really good. And I love the fact they don't use dynamic trailing stops. I think it's really, really quite exciting. So what I want everybody to do, guys, is, again, if you're going to get funded, I want you to get one account funded only, guys. Now, what you want to be doing is trading very, very small positions, and you want to plan for the funding process to take at least 1 month. Now, there are some people, guys, that have got funded in 2 to 3 days. How have they done that? They've waited for pivot-based reversals and they've loaded contracts on it. Right, so let's say you're a NASDAQ trader, you pick up a pivot-based reversal. Right, they might be trading 2 contracts normally. Okay, if they get a pivot-based reversal, they're going to load 4 or 5 contracts onto that reversal. All right, knowing that it's likely to go a long way in their favor. Mind you, if it turns around and goes against you guys, you get 2 of those trades and it blows you up. So it's so I would suggest, guys, you trade the account as if it's your drawdown. Very, very hard, guys, to blow up a $6,000 account if you're trading 1 contract on the NASDAQ going for 100 tick targets. Very, very hard to blow that account up. Okay, so what does that mean, guys? In terms of expectation management, if you were to say, right, Lachie, I'm going to get funded in the month of February. I'm going to get funded in the month of February. Then I would set an expectation of, you know what, I think this is going to take me up to a month. What am I going to do in order to try and actually get funded as quickly as possible? I'm going to go for the biggest targets I possibly can. As understanding with TTP, that's a really simple process. With Apex, you've got to be very careful. You don't let these long range trades go a long way into profit and then come down and stop you out at break even. Otherwise, that hard stop, guys, is going to chase you cent for cent. Now, this is it, guys. The dot number 2 is a huge one for me. Please do not copy trade until the initial funded account has been doubled. Now, this is big. This is big for me personally, if I can be so bold. Not only am I speaking to people that are basically trying to get 10 or so accounts funded simultaneously, guys, they're also then copy trading into other accounts, even though they haven't got a single funded account funded. So what I would do, guys, I would get rid of all that complexity. Now, in my case, guys, use me as the example. I am, guys, this year, but very, very soon, guys, I'll be in a position where I've been funded on 4 $250,000 accounts. Now, my goal is to have $1 million under management. It's always been my goal, which has been really, really good fun. The flip side of that, guys, I didn't say, all right, well, what I'm going to do, I'm going to go and do 4 $250,000 accounts simultaneously. What I said is I'm going to start on 1 $250,000 account. My goal is $15,000 profit. If I'm making $200 to $300 per day, let's just do the maths on this, guys and girls. So again, we'll do the maths. If you've got to make $15,000, okay, and you are saying, oh, Lachie, my goal is to make, $200 to $300 per day. So let's say divided by $300 per day, guys, it's going to take 50 trading days to do that. Now, understanding that there's an average of 20 trading days, guys, in every month, if you're doing, guys, what I'm doing, it's a minimum of 2.5 months to qualify. Minimum of 2.5 months. Now, you can go for bigger targets with TTP, guys. So let's say, like yesterday, for example, guys, I picked up a really, really, really good trade. So my point being is that, you can go for very, very large targets and try and reduce that down, guys. But anybody that says to me, Lachie, I want to get funded at the 250 grand mark and I want to get funded in 3 days, I would say to them, so at the moment, are you averaging $5,000 per day profit? No, I'm averaging $50 a day. I said, okay, well, we might have a slight disconnect here. Now, guys, if you don't mind, I'm not being rude. But when you go into this funding process, I want you to go into the funding process with a realistic expectation. So you don't get 2 or 3 weeks into the process and start beating yourself up going, oh, this is ridiculous. This is not working. Because right now, if your daily goal is $200 to $300 per day, and you want to get funded, it's going to take $3,000 to get funded. That's around about a 10 to 12 to 14 day process. If you need $6,000, you're looking at a 20 to 25 day process. What does that mean? You're looking at more than a month. Well, it's more than a month of trading. Now, mind you, if you do what Ahmed's just done, 21, 31, 41, and 101, and then 21, 31, 41, and 41, guys, can everybody suggest just there that Ahmed's probably averaging more than 30 ticks per contract on every one of those trades? So now, Ahmed, I don't know how much that works up to financially, but if Ahmed was on the $250,000 account and he was aiming to get funded at that level and he was being careful, he could quite happily be trading 4 contracts. Now, with TTP, if he was with TTP trying to do that, guys, I would personally be stacking all of my targets at the long range and going for massive wins because there's no dynamic trailing stop. If I was with Apex, I'd be doing exactly what Ahmed is doing. Getting the money out of the market quickly, so that dynamic trailing stop is not that much of an issue. Okay, so that's what I would ultimately do. Okay, now, guys, I'd suggest, guys, now there's some people who won't like this, and that's okay. But guys, I would only copy trade. So I would only start copy trading when you are fully funded and you're consistently profitable for a minimum of 12 weeks. So what does that mean? Off the back of this webinar, you might say, righto, Lockie, my goal is to get funded in the month of February. All right, so boom, click, boom, 28th of February, well done. I'll pick on Diane. Diane is funded. Well done, Diane. That's brilliant. Guys, what Diane would then do is say, Lockie, isn't this exciting? I've got funded. What I'm now going to do is for the next 3 months, I'm just going to focus on building my funded account so I get out of the danger zone. So Diane, what you might do, let's say you're funded at 100 grand. Guys, Diane might say, right, my goal before I start copy trading, my goal is to get my funded $100,000 account to $120,000. So if I make a mistake while I'm copy trading, I'm not going to blow up my original funded account. Now, guys, from experience and observation, a number of people have gone and got their first 2 or 3 accounts funded. Then they've actually started copy trading into 10 accounts simultaneously. So they're trading like 14 or 15 accounts. They've made a mistake while copy trading. They've lost track of their proper account and end up blowing up all of them and have to go and start again from scratch. So, guys, what I would suggest, and I know it's the way of going slowly. But at this point in time, guys, if you were to stick to the NASDAQ 2420 plan, or guys, FDAX, your equivalent is 5410. Because if you were to simply say, Lockie, my goal is to get funded at the 150 grand mark or the 250 grand mark, all I want to do in the next year is double the 150 grand account. Or all I want to do in the next year is double the 250 grand account. No copy trading, no replicanto software. So guys, imagine if everybody in the webinar said, all right, Lockie, 250 grand sounds good. I'm going to get funded at the 250 grand mark. And my goal this year is to just double my 250 grand account. Out of interest, guys, if you double your 250 grand account, how much have you earned this year? 250 grand. So I wonder if you can do that on the FDAX. Again, you can. 5 points a day, 4 days a week on the FDAX. If you work up to 10 contracts, guess what? It's $250,000 US. NASDAQ traders, if you were to do 20 ticks a day, 4 days a week and work up to 20 contracts, guys, around about the 16 contract mark, guess what you do? You pass through the $250,000 US mark. So guys, we could for the moment say, hey, Lockie, why don't I just get funded on one account? Just get funded on one account, and then I'm going to seek to double that account over the next 12 months. Because guys, people, and where I'm going with this is people ask me all the time, Lockie, what account should I start with? Should I start with 50 grand? Should I start with 100 grand? Should I start with 150? And I say to them, guys, my advice straight back to them is, how much money do you want to earn in this financial year or this trading year? Most people say, oh, $100,000 would be great. I said, okay, start with a $100,000 funded account and just go and double it. And there's your answer. And guys, people look at me, they smile at a guy in Japan recently, guys, who was skiing with, who's just smiled at me and went, is it that simple? I said, well, hang on, slow down, Tiger. You said you want to earn 100,000 US dollars this year. Absolutely. I said, well, go and get a $100,000 funded account and just double the 100,000 and just double the account. And at the end of the year, pull out the balance. Can everybody, without being rude, can everybody see how simple this process can actually be? To build confidence in the first. Well, that's a really great question, guys. The question is it worth starting with a $25,000 account to build your confidence and go from there? If you would like to do that, you can do that, mate, if you want, because that will work. I mean, you can start as low as a $12,000 account if you want, just to dip your toe in the water. The $50,000 account, guys, the $50,000 account is proving to be the most popular. Okay, so because again, I think it's call it a $3,000 target and a $2,500 for trailing stop. As the 50 grand account is proving to be most popular. Now, what I'm going to do, guys, is to explain to you why it's so popular. Guys, we're going to go to the charts. My tip to everybody, please, is don't rush this process. Guys, don't rush this process. If you can literally eat a little bit of humble pie and say, all right, Lockie, I'm going to get funded on the 50 grand account. I want to make $200 to $300 per day. How do I do that? Guys, then you would basically say, I'm a NASDAQ trader. I take reversals. I'm a ratio-based trader. It works really, really well. All right. So finally, guys, finally, for those that are not funded, guys, if you go to the normal Samurai Day Trading website, guys, there's the funding link there. Guys, if you're going to go with TTP, there is a discount code. All right. So if you're going to go with TTP, there is a discount code called Lachlan 15. I've asked them for something a little bit more original, but they said that's really original. So guys, we're going with Lachlan 15 at the moment. Now TTP guys occasionally run sales as well. So just again, watch for that. But again, there's a discount code for everybody. Now, we're going to go to the live charts, guys, because I want to talk about the difference between the Apex and the TTP traders today. Okay, I want to talk about the difference between the Apex and TTP, and I also want to talk about the different way you would have worked your trailing stops accordingly. So let me click on that, push escape. In a perfect world, we're going to end up with a NASDAQ chart. Okay, now we're just going to pick on the NASDAQ, guys, because it's really, really, really straightforward, That's Louis, guys. That's Louis' little trade that's Louis' little trade today, that -6 rated static bar reversal. Fancy that on the turn of the hour. Fancy that. Has anyone ever heard me say on the turn of the hour? Does anyone? Ken, I would suggest it does, but I would have to ask that specific question because I have never been asked that question before. Understand previously about 100,000. Yeah, got it, mate. Got it. Okay, so guys, this is what we were trading today. All right, so this is the NASDAQ. We'll just get rid of the Fibonacci for a moment and clean it up. Okay, so here's the start of the European Open. Okay, here's the start of the European Open, which is right here. Oh, that's actually when our session finished, guys, right there. Now, even though it went far enough to trigger trailing stops and similar things, what you want to be doing, guys, to get funded is you want to be picking up reversals that have a long way to go back to the MDI. Okay, a long way to go back to the MDI. Now, here's a great example. Can everybody see right here? You've got a static bar reversal long off the 50 of the day. Okay, can everybody see that? Now, the very, very, very new traders, guys, the very new traders would have said, Lockie, I'm going to put my entry over the top. I'm going to put my entry over the top of that candle there, and I'm going to wait 15 minutes to maximize the profit on the trade. Okay, now, as it turns out, guys, let's say you ended outside the body of the candle. It's gone 10, 20, 30, 40, 50, 60, 70, 80. It's gone almost 90. That would personally, guys, have taken me out around about the 65 to 70 tick mark. Okay, literally 75, probably about the 70 to 75 tick mark. Being a little bit of a smart ass as I am, because I wrote the Delta V2 indicator, guys, I would have entered on that V2 right there. Okay, so they've sold down, couldn't sell down, can't sell any of these, not allowed to sell in the 55th of the day. That V2 coming back the other way, Because simply means the advanced traders got in with 20 ticks less risk and 20 ticks more potential. Now, we're going to learn a bit of a lesson here, guys, because when I started the webinar, I had absolutely no idea what the NASDAQ was doing. Now, if you had have gone, guys, for 100 tick trade, because that's a pivot, if you had have gone for 100 ticks on this, the question is, has the NASDAQ gone to 100 ticks? Let's have a look. It's gone 10, 20, 30, 40, 50, 60, 70, 80, 90, 100, 110. Now, the difference between an Apex trader and a TTP trader. If an Apex trader had have taken that trade, guys, it's very, very, very smart for them to go for 20 ticks, then 40 ticks, then 60 ticks, and then maybe 80 ticks and potentially 100 ticks. Now, what's the problem, guys, with this? They've got 5 contracts. All right, what they're doing is they're getting in, and the moment the market moves in their favor, they're banking cash, moves again, banking cash, guys, because what they've got is they've got this trailing stop, the hard stop that's moving behind them. Every time that market moves a cent in their favor, now, mind you, guys, in reality, your trailing stop could be like all the way down here, right? Your trailing stop might be $2,000 behind you, sure, but it's moving. It's literally, it's like this little sneaky thing that just keeps on sneaking. Now, guys, an Apex trader, understanding that the advice from those that have already been funded by Apex is go for as many short range targets as you possibly can. So guys, a lot of Apex traders would have said, all right, Lockie, I'm long on the Delta going for 20 ticks, click, I'm done. Awesome. Then it turns around and goes more than 100 ticks. The TTP traders, guys, are saying, Lockie, I've got a Delta off a pivot and I don't care about trailing stops. So I'll tell you what I'm going to do. I'm going to take the Delta and I'm going to try and go for 100 ticks on all of my contracts. What I'm going to do instead of worrying about a dynamic trailing stop, I'm going to go long on the Delta. I'm then going to wait for the candle to close. If I'm closing in the profit, I'm going to reduce my risk slightly. If that candle closes in the profit, I'll reduce my risk a little bit further. If that one closes in the profit, eventually, guys, guess what? You go straight through the 100 tick target. So let's say you were a 2-contract trader on Apex, okay, 2-contract trader, and you went for 20 and 40. All right, what's your total result? 20 and 40. You've gone for 60 ticks. A 2-contract trader with TTP has gone from here to there. So the TTP trader has done 100 ticks times 2 contracts. All right, so how much have they done? They've done 200 contracts. 200 contracts, fancy that. Guys, they've done 200 ticks, whereas a conservative Apex trader has only done the bottom because they're worried about the trailing stop. Okay, now let me build on this again. Will TTP ever go away? Rebecca, that is a great question. And I say that, Rebecca, I've never asked that question. So, Beck, I'm going to go and ask them for you. But the long story short, Beck, that would probably only apply if you actually well, there you go. Mark's answered the question. Beck, it's only in the challenge stage. Guys, once you are funded, the game changes. Like, you know, there's a couple of little fine tunings, guys, that are coming shortly about day-to-day payouts. So if you have a really, really good trading day, you can write to the funding partner and say, hey, look, I made a couple of $1,000 yesterday. You mind if I grab $1,000? So guys, once you've funded, it's a really cool little game. And as I've said to many people, guys, it's an incredible game changer. What's that, Petros? With TTP, after you are funded, you need 10 trades of at least $200 before you can submit your first withdrawal. No time constraints, mate. You are 100% correct. So guys, interesting point, and Petros has brought it up. I think it's a great point. Again, I'm not saying us and them, guys. This is not an us and them, but what I am finding is that the TTP team are all about consistency of performance. They're all about, please don't take a massive swing at the market in case it goes the wrong way. As in, it just builds and builds and builds from there. All right. So there are some consistency rules. So what I would do is just do some reading on the TTP website. At the end of the day, guys, there's little rules with every one of the funders. What I do find really exciting, is that TTP are encouraging people to be consistently brilliant and stay around for the long term. And I find that very encouraging. Well, it's very, very encouraging indeed. Now, trade 5 days of 200 for a second payout and every 7 days. Okay, perfect, Keith. Thank you, guys. Keith is on the money again. So well done, guys. Now, guys, speaking of reversals, all right, speaking of reversals involving pivots. Okay, so we got this reversal here. We got that reversal there. Now, again, guys, it was a 4-point turning bar. That's the static bar reversal. That's the first reversal we called in the LTR today. And it's gone 10, 20, 30, 40, 50 to the downside. Okay, now, from the volatility today, guys, you could have now the volatility was not that high, guys, when we started the session. It started to get increased as we run through. But let's say you went for I'm a TTP trader, guys, as in, let's say Nathaniel. Nathaniel's a TTP trader. He's just going to go for 50 ticks on every single trade, guys, because he doesn't want to offend anybody. 50 ticks is $250. So, mate, you're looking to get funded in around about 12 to 14 trades. How do I do it? All right, so if you took the first of the 4-point turning bars here or the static bar reversal that we spoke about in the LTR, just went short for 50, you're done. Okay. What then happens is you wait for these guys to cruise up. Static bar reversal. We can't assume a close over the pivot. I send to everybody, if you want to grab that Delta V2, guys, grab the Delta V2 and then go. What has that done? Gone more than 50 ticks. Then we cruise down, guys. I completely missed this. Like, I wrote the course, guys. I completely missed this. What trade is that? Well, I don't know. Does anyone want to tell me what trade that is? It is one of the most famous trades in the world. Guys, it's the first time the MDI has turned red. It's the first time the settlers have closed under the MDI. It's a bias switch short. Now, let me ask you a trick question, Diane. Trick question. How many phases does the market normally move in? How many phases does it normally move in? Well done, Diane. 3. So, guys, a little bit of teach. Phase 1. Phase 2, no higher high, no higher high. Okay. And down the bottom here, we've finally got phase 3, and then we end up with a bit of a stumble. Yeah, no, Diane, but they are not a trade that I see easily. Okay, so the way to see a buy switch trade goes, now I completely missed this in the LTR. I completely missed this. Diane, it's the first red candle that's closed outside the range of the previous candle after the MDI has turned red. So we've gone from a green MDI to a neutral MDI to a red MDI. Would everybody agree that's the first time we've closed under the MDI? So again, guys, my mistake. I was moderating. There's about 200 people that were watching what we were doing today. But again, that's all right. We're in Raymond, all good? So, guys, that is a bias switch short. It's an efficient CORPC bar with step and trend. What we should have done, instead of buying long, guys, we should have waited for the retrace, waited for the rejection, gone short under the candle and held it for 15 minutes. Yeah, Petros, exactly right, guys. And again, in my defense, I did say to everyone in the LTR, it's not a very good reversal because it's very close to the MDI. Yeah, Keith, you are correct. But guys, so imagine if we were reading the market correctly today. Imagine this. And let's say I'm Nathaniel, guys. I'm Nathaniel. And I'm using 50 tick targets, all right, which looks like that. Okay, I could have gone short over here for my 50 tick target. If I picked up the delta there, I would have gone short for my 50 tick target. If I picked up the bias switch short there, I would have gone for my 50 tick target. Was basically end of the session. Cruise. Wait for the turn of the hour, guys. Wait for the turn of the hour, which is 1900. Okay, got to be really, really careful trading off that particular candle because that is the turn of the hour. These guys have turned around. That is not a 4-point turning bar long. Right? It's not a 4-point turning bar long. All right. So again, they've fallen away. Eventually, we picked up this one down here. So what it means, guys, really simply is there's 3 or 4 50 tick trades today. Now, if you were on one contract only, Guys, you've earned $1,000 today as a NASDAQ trader trading one contract only with the intent of earning $3,000 to get funded. So as getting funded and staying funded, my humble opinion, I think it's a lot easier. It's a lot easier with TTP because you can go for bigger targets. You don't have to worry about the trailing stop. But Apex is cheaper. Well, so people have said to me a couple of times, well, Lockie, it doesn't matter. I'm going to have a couple of cracks at Apex for one crack at TTP. So, okay, well, you could do that if you want. Nathaniel, great question. Sorry to ask again, on 2 contract ATM, would my first target of 10 or 20 ticks and the second throw out to 100? Mate, what I would do, Nathaniel, what I would do if I was getting funded with TTP is I'd put both of your contracts on 50 ticks and I'd go for 50 ticks on every single trade. If I was getting funded with Apex, I would probably use a 20 tick target and a 40 tick target. And I would make sure that on my first target, I'd use a touch 16, pay 10. On the second one, probably touch 16, pay 4. So I'm giving it an opportunity to run, but I'm also locking in money because I've got that trailing stop behind me. Yeah, Diane, spot on the mark. If I was on FTAX and I was on FTAX on a 50 grand account, I'd use 1 contract on FTAX or I'd use 4 contracts on the FDXM. All right, if I was on the FDXM, I'd use 4 contracts and I'd use targets of 5 and 10 if the volatility is under 20. If the volatility is over 20, I'd go for 5, 10, 15, 20, trying to sort of milk the trend a little bit, but at the same time, I wouldn't be outstaying my welcome on that particular trade. Yeah, so Diane, to answer your question, 1 contract on the FDAX, 4 contracts on the FDXM. Okay. Now, guys, that is the little NASDAQ today. So again, I missed that buy switch short. Now you'd think I'd pick it up. I wrote the trading system, but in the heat of the battle, guys, I missed that. The flip side of that, guys, can everybody see? This is our little NASDAQ today. Can everybody see the potential for at least 1 20-tick trade? At least 1 20-tick trade. Now, guys, if you want, I can bring the Excel spreadsheet up and show you what 20 ticks a day, 4 days a week looks like on the NASDAQ. Because we are in a very, very, yes, Diane, I would. I'd just go for 5 points. Absolutely, because it's $125 US. You only need, well, let's do the maths on it, Diane. If you want $3,000, right, $3,000, and you're making $125 US on a good trade, you only need 24 successful trades. Now, guys, again, how many times do we pick up 5-point trades on the FTAX? Often. I look at the first one and didn't see wrong with it. Coal, the second delta. Oh, mate, mate, you mean this one here? Mate, there's absolutely nothing wrong with the first except to just move too fast. I just moved too fast. Yep. James, TTP Classic, you can't. It's got to be a prime, mate. It's got to be a prime. So I think the largest prime account is 150. So you just, I personally would go for the largest you can, the largest you can. Ahmed, you're saying, yeah, SBR has been reloaded again. Oh, look at this. Like, this is just, oh, look. Right, now, Nathaniel, great lesson. All right, this guy's sitting down. Again, this is live, guys. Didn't know this was going to happen. Ahmed, 62 ticks. Well done. Guys, the reason I mention this, can everybody see that we've cruised down on the turn of the hour? This turn of the hour is becoming my favorite thing in the world. Guys, we draw your Fibonacci up to catch them on the way down. Hey, presto. There's your Fibonacci failure. There's your Fibonacci failure. Guys, Nathaniel, there is your 50 tick target. Guys, based on the static bar reversal, and you've just pulled 50 ticks. All right, guys, if you wanted to double back off those Delta V2s, guys, there's your lower Delta V2. You've been picked up on the way back up. There's another 50 ticks. So, guys, I love where we are at trading-wise. Guys, now we've had 4 to 5 people this week, guys, reach out to and say, Lockie, how do I become an affiliate? I cannot believe you guys are doing what you're doing. Guys, so guys, if anyone in the webinar tonight wants to become an affiliate, guys, all you do is just email Craig, say, hey, can I become an affiliate? He'll guide you through it. He put an actual video in the members area today, guys, explaining how to become affiliate. And we go from there. Mark, can you make $100,000 on a 50 grand account? Absolutely. Mate, what you do is you trade the 50 grand account up to a $150,000 account and then withdraw. Now, Mark, I would personally be wanting, if I got a 50 grand account up to 100 grand, I'd probably take a big chunk of cash out and then grow it up again. Okay. I wouldn't just sit there forever. I'd take chunks of cash out along the way. Is what I would personally do, Mark. Cole, what happens to the Ninja data feed? So if you're going to go through a funding partner, guys, you can turn off your original NinjaTrader data feed because you won't need it anymore. Your data feed will come through your funding partner instead. So that raises a great point. If you're going to swap, guys, from Apex to TTP, guys, please make sure that you've got to go and use the TTP Tradeovate data feed. You can't use an Apex data feed on a TTP platform. It doesn't work. Mark, you spot on the mark. So with a $50,000 account, you can only go up to 4 contracts. But I would suggest, guys, if you're going to get funded with a 50 grand account, again, you're trading your drawdown, which is only $3,000. I'd be trading 1 contract only. Aaron, ghost trades, a couple of people are reporting ghost trades. Maybe once a week, somebody's picking up a ghost trade, maybe once a week. But the way around, guys, the way around the ghost trade is to actually have the Tradeovate platform running in the background. Okay, so again, just to show you how you do that. Okay, so again, so I've got it here, guys. So again, this is what I do. So if I have a problem with my Tradeovate, all I do is come in here, username, password, push go. It opens up the platform, and I just close the trade. Now, guys, Damsey in Sydney is actually executing the trade. So he's executing his trades on the Tradeovate platform to get around the ghost order problem. Yeah, so I think while you've got multiple softwares trying to join to each other over microseconds over the internet, there are going to be ghost trade issues, sure. But Aaron, the way around it is if you are with Tradeovate is just make sure you've got the Tradeovate platform running in the background, and then you can actually close the trade if there's an issue. Nathaniel, that's a great question. So I've actually got one of the guys in Australia filming a video on how he went through the TTP process, on how he plugs in this and how he plugs in that. So I would chase him for that video, but I've also chased TTP for the same video, saying, can you guys please put together a video on exactly how to connect your data feed and similar things? Mate, I've done it for Akito. It's very, very straightforward, but there's a couple of little nuances, like you have to disconnect your old data feed. Yeah, you've got it. So you can't connect, guys. You can't connect a current, like, for example, Rhythmic data feed. You can't try and connect that into TTP because it doesn't work. Okay. So, guys, what I wanted to do tonight is I just wanted to break down the funding for what it, in my humble opinion, what it really is. I think it is an absolute game changer, guys. This funding thing is a complete game changer. What I would suggest you do, guys, is you decide whether a dynamic trailing stop, so lots of short range trades, or an end of day trailing stop. Which one actually sounds better for you? Yes, you can, Mark. You're on the money. So, guys, which one sounds better for you? I would then say, right, what level do I want to be funded at? Guys, I would set a realistic time expectation as to how long you think that's going to take. Guys, if you just want to have a crack at getting funded, Apex is a lot cheaper. All right. If you just want to get it, you just want to have a crack at it, Apex is a lot cheaper. TTP, though, is a lot simpler to qualify, guys. Now, again, my humble opinion, having been through the process, I would prefer to go for large targets on every trade and not worry about a trailing stop chasing me. Guys, now, in my personal experience, that took the pressure off my trading. That you saw it a couple of times, guys, in the LTR said, oh, thanks, Cody, just went for 25 points on the FDAX. So instead of going for 5 points and going, oh, thank God I'm out of that trade. So you know what? I'll go for 25 points on this trade. It's a pivot-based reversal. If I pick up a 25-pointer, guys, in the case of the 250 grand level, 150 grand, guys, you're literally 1/6 of the way to getting funded with one trade. So I just wanted to highlight, guys, the difference between a dynamic trailing stop and an end of day trailing stop. Guys, I think both companies have got incredible potential. TTP is proving to be really easy to work with. There's no doubt about that. And for the Nathaniels of the world, what I'd be doing, guys, is I was a NASDAQ trader. I'd be looking for between 50 and 100 ticks on every trade, guys, with the intent of getting funded in around about 14 to 15 trades and also getting funded well inside a month. Guys, again, what I'd love is everyone in this webinar, guys, to eventually be funded at about the 100 to 150 grand mark. And then we just get on with the job of doubling your account in a 12-month period. And that means everyone in the LTRs are more than 100,000 US bucks a year. I think that's really exciting. I think it's really, really exciting. So, guys, I hope that webinar helps explain some of the sort of like the basic sort of principles of why we are doing what we're doing. How many samurais have day jobs? Mate, I think it's getting less and less. I think it's getting less and less. I did speak to one of the samurai traders today, guys, who was about to transition to full-time trading. So that's just another person that's hanging up the boots at Bunnings. They're not going to Bunnings anymore, guys. They're a NASDAQ trader. They're just bopping along. So what I wanted to do with everybody today, guys, is just say, listen, this funding process is not scary. It's not hard. Now, the key with getting funded, guys, is I would pick your trade. If you're going to go with Apex, you're going to have to focus on lots of short range trades so that trailing stop doesn't take you out. Guys, if you're going to go with TTP, you can go for far longer range targets, guys, on every trade with no concern about getting taken out. All right, that's what I would be doing. That's what I'll be doing. So, Ali, I think it's really exciting times. Not only am I a long way away from the Gold Coast, some of you can smile because you know what's going on there, but I'm a long way from the Gold Coast, which is very exciting, Ali, because I can get on with what I love doing. But flip side, it's really exciting to be partnered, guys, with TTP. Now, again, tonight, I didn't want to say go TTP, but at the end of the day, I wanted to make sure, guys, that you guys understand the dynamic trailing stop versus end of day, guys, and you also understand that there are pros and cons to both. But, guys, it doesn't matter how you get funded, as long as you get funded. If you want to take advantage of it, it's really good fun. Yeah, perfect. Okay, good. So, guys and girls, Diane, I'll reach out to you. That's it, guys and girls. Have a great night. The LTR was really good fun today. Again, that's the NASDAQ working live. Guys, look at this turn of the hour stuff, guys. Now, I just want to highlight one point, guys. This SBR has been revisited here. It's been revisited. Guess what happens? Comes down, hits the 76 fib. Ahmed, how long do we hold? How long do we hold these trades for before they maximize their profit, guys? Look, 1, 2, 3. Oh, guys, a live chart is teaching you about the rule of 3 and how to hold on for longer range targets. I think that is just worth its weight in gold. So on that note, guys and girls, I'm going to run. I'll see you in the LTR tomorrow. It is a 15-minute chart trade, Ahmed, so you can hold your long for up to 45 minutes. Guys, have a great night. We're in for a very exciting year. There is no doubt about that, and I'll see everybody soon. Guys, see you in the LTR tomorrow night. Thank you, guys, and bye for now. Bye.